What's up, everybody? Welcome back to the High Performance YouTube Trading Channel. I'm your host, I'm your coach, Joshua Salvetti, and today I have a phenomenal, important lesson that I want to break down. It's all about understanding the market auction, right? And what that actually means. And basically, at the end of the day, it's buyers and sellers that move the market. Nothing else, not the RSI, not the MACD, not even a moving average. It's buyers and sellers that constantly battle over a given price, right? And either make that price go up or make that price go down. So I got a quick little recap of the CPI day, and that is a perfect example of how to understand the market auction. So in this lesson, I want to break down three goals, right? Number one is how to interpret the market auction, right? Number two is end of day, which is a strong area of value. No matter what, there's always interest in volatility at the end of day mark. So we're going to go over what that is, what that means. And number three is some repeatable skills that will lead to consistency for you to become a consistently profitable trader. So let's dive right into the lesson. So first things first, there is two types of market auction, right? And basically it's an organized chart, right? Or it's a disorganized chart, right? Organized meaning there's clear areas of value, there's clear supply and demand zones, support and resistance, you're in a clear trend. Or it's disorganized, which means it's not clear at all. So organized, right, is basically means you can look at the chart and you see the supply zone, right? You see the demand zone, right? You have clear areas of value. It's very balanced and organized trend, right? You're either in an upward trend, downward trend. And you have a clear game plan, right? A clear entry, clear exit, a clear and organized plan that is going to make you money. Number two, we have a disorganized chart, right? And this happened all on December 13th, 13th of the CPI news, right? Where it's very disorganized. There's no clear areas of value, right? You have no clear levels of interest and you have no game plan. So basically, you want to take a disorganized chart daily and turn it into an organized chart. And we do that by observing the market context, right? And comparing and contrasting exactly what's going on. So this was the day of SPY on CPI, right? And what's very important about this chart is, and if we go back to the last chart here, this is kind of, and I know hindsight's 2020, and this is a full organized graph. Actually, I just want to break down what exactly it looked like. So this was the CPI day over here, and this is kind of what it looked like. So first things first, I want to break down is your end of day, ladies and gentlemen. So end of day is extremely important. The three things I look for every single day when I'm trading repetitively is end of day, right? I look for supply and I look for demand on all time frames, right? So first things first, though, if you're looking at the CPI day on the 1 hour time frame, it looks as if we had a breakout. Like this chart looks very bullish right here, right? Price ripped above this 410 supply. We're making new highs, right? That's extremely bullish. But over here on Tesla, which was the same exact day, which Tesla has had crazy amounts of volume, even more than the S&P 500 lately, Tesla ripped right into this 180 zone, which was a strong supply. So over here on the left, you have a chart that is extremely organized, right? You have a game plan where if price comes up into this 180 zone and sellers are present, I'm going to take the market short. I'm going to take Tesla short and target this 170 zone demand, right? Where SPY is completely ripping. And now when you're in the moment, this is kind of, it's confusing because you don't know if SPY is going to rip and pull Tesla up, right? So erase all that thinking. Let's simplify this, right? So we have an organized chart on Tesla. We got a clear supply zone, an area of value where sellers took the market short prior, and now you have a retest back in this 180 area. For those of you that follow me, the double top drop in this market is by far my favorite trade. So that's kind of where my mind's at as the day goes on. So since SPY doesn't have a clear area of value, it's very disorganized on this CPI day, how could you trade this, right? Well, I'm going to tell you exactly how I ended up trading it. So basically, once the market opened, I waited patiently. I had my eye on Tesla. Tesla was selling off, right? And SPY starts selling off, and I'm just letting the market tell me her story, right? I am being extremely patient. My edge is not present. If my edge is not present, which basically means if we are not in a supply and or demand zone and there's not a chart pattern, I am not going to make the trade. Simple as that, plain and simple. And it is so important, ladies and gentlemen, because I battled with this for so long, trying to rush trades, get in and out of trades without my edge, and it cost me an absolute fortune. So I need to stress and explain to you how important it is to only trade when your edge is present. So SPY rips off at this 407 area, gets back above VWAP, and then comes right back into the market open area, right here at 410, where we get a seller. Market looks weak, and at the same exact time on Tesla, we have already rejected the supply zone. That is my key indicator to take the market short. My edge is now present. We have a double top or a supply rejection in a supply zone. It is time to take the market short, right? And it's exactly what I did. Now, since we had demand over here on Tesla, my goal here was to target 407.50, right? SPY options, $3 move. It's around 125%. That was my target. I'm not going for a slam dunk home run trade and capture the full move, right? I do not know where the market's headed. My edge in my plan is 410 to 407.50, right? And that's exactly what happened. We came through, break that, phenomenal trade, took an organized chart, took a disorganized chart and turned it organized by using market context, by understanding and interpreting the market auction, right? So, and then sellers obviously continued to take control and bring the price down. Now, my next important and vital topic for this discussion is end of day. Now, I want you to look at it like this. This is a market auction. You have buyers and sellers. If you're a buyer and sellers are in control, would it not make complete sense to hop in where it's the S&P 500's most liquid, which is the prior day close, end of day? Ladies and gentlemen, extremely important to understand. End of day will always, if price retests end of day, I promise you, probably 7 out of 10 times there is going to be extreme volatility around end of day, and that's exactly what happened on this day in this market. We had another $5 move from end of day and moved all the way back up. Now, I was playing 0-day options on this day, so I got out really quick, and then you can see we had a little bit of a resistance right here. But the point I'm really trying to get across is end of day was a perfect bounce, right? Buyers came in and stepped up. Obviously, they couldn't hold, but you need to understand that information to make very good trades. So back to the PowerPoint. We turned a disorganized chart into an organized chart, right? And listen, if the situation is too disorganized and you don't like the trade or the setup, do not take it. You do not have to take a trade. There is no one holding the gun to your head, right? And that is the most important part of this, right? So to wrap this lesson up, the repeatable skills, right, is observing the market context, right? Comparing and contrasting, right? Tesla, SPY. What's going on? Where are there levels of interest on both charts, right? Number 2 is interpreting the market auction, right? Let the market tell you her story. Do not assume on the market. If you assume, she will make an ass of you. Number 3 is patience. Notice how I wrote that here, patience. Patience is something that you absolutely need to use on this market. If you don't, you will get crushed. It pays to have patience. Number 4, no game plan, no play. And number 5 is end of day equals a guaranteed volatility, right? And volatility equals a guaranteed level of interest. So that pretty much wraps it up for this lesson. Ladies and gentlemen, like, subscribe for more content, right? This is the High Performance YouTube Trading Channel. Course coming soon in January, but all together, I'm here to grow and build a unified trading army. I'll see you on the next lesson.